Good morning. Let's get rolling. All right. So markets gapping down, recession realization is being accepted. And the markets are, I guess, starting to figure that into the prices. And this week's reversal looks pretty ominous. And S&Ps are gapping down to that 50 MA. That alert will go off at the open. And hold on a sec here. Okay. And as we always do, we look to the left of that moving average to see what it's aligned with. You can see my cursor there. And this is the area we were looking at yesterday as a downside target in the green room, which was, these two bars, which just about touch each other. You can see there. And so now it's gapping down below that area. You can see the 5-minute chart of SPY there. Now, so it was down a bunch yesterday. There was a little bit of consolidation, which started happening, I guess, around, you can see there, just around 12 o'clock, 11:30 or so. And the attempt to move up failed. I'm looking at the 15-minute chart there as it came up to that pivot high. And it just flipped back down again. So it was pretty whippy and erratic. So now, the gap down a little below that area, down a bunch, maybe buyers show up a little bit, just because of the gap down. And, it is down a lot from the high here. Let's see if we can just look at that. Yeah, it's going to be down about 6% from the high. That doesn't mean it can't go lower. Remember a little over a year ago, 2 years ago, markets were down 3 to 5%. It was a huge buy. Now we get 5% moves up and down in a short period of time. Ultimately, this looks to me, I don't think this is going to change much today. The Optimus expiration, we're getting into the end of the year, but look, this pattern and this big topping tail rejection up at the highs there really suggests this going down to the October low. It'll deal with this first point of congestion there. We'll see how it reacts. The market has been very erratic, but ultimately, this topping pattern, kind of like that head and shoulders top, and it, the gap up kind of puts not a textbook type of top, but other places it is more of a textbook. In any event, however it formed, it's a topping pattern. You've got a neckline and it's breaking down through the neckline, and that suggests it's going to go lower. Now, internals, which you always keep an eye on, are beginning to line up together, which is what we want to see. Now, at the end of the day today, we'll see where this is at. Sentiment is just starting to touch the upper band. But in this market, I think I'd want to see it go down to 1.2 and this, pushing down toward 200, minus 200. And I just that lining up in the end of the year, even looking out into next year, the beginning of the year, prices probably go lower. Ultimately, with the holidays and all, maybe the market can, put some kind of little short-term rally and get some kind of pop going. I don't think it's getting back up here by any means. And that would really be amazing. But that's what shock patterns are about. It's not that we expect such things, but when we look at patterns and say, well, in no way, shape, or form should that ever happen. Just like this wide range bar, moving up a power bar like that. In this power bar, it shouldn't go back down there. And when they do, that's bearish. The gap up was, oh my goodness. And we all remember that. And it was like, wow, this is crazy. And crazy, you want to see more crazy? It came right back down again. So ultimately, I think this is going to go significantly lower based on this rejection. I think potentially, if we get some more downside that comes down into this congestion area down here, somewhere down here. And if we can get down there, maybe by the beginning sometime of next week, can you imagine? I don't think it's happening today, but for sure, that would be another shock. But, coming down into that area, by sometime next week, and we could have a decent little bear market Christmas rally. So what does options expiration? Well, options expiration many years ago used to be pretty erratic and whippy. So, maybe it just kind of puts a lock on things here for a while where things chop around. Just looking at the downside, I mean, 30, you have to go back to SPX. But anyway, let me finish this here. So you can see my cursor where prices are right now. There really isn't any significant support there. Coming back up to this area should have sellers. Futures, if anything. And right on the 50 MA, while subjective, it's widely followed, even on, looking at a futures contract, simple 50 MA sitting right there. And so options expiration. So we always look at where's the huge open interest levels, the most significant ones. And so, today, just looking at the downside, as I look through here, 3,900 is big, and we know it's below 3,900. So unless it can regain that almost immediately, it should be able to fuel prices going lower. So it's going back here. Drew out that little head and shoulders there. So SPX is below, it's on the 50. Unless it can regain that, it could have a move down to 3,800, which is where the next large open interest is. 3,875 is somewhat larger, like 16,000, I think it was yesterday. And then 3,850 is 47,000. Right, so 3,850 is about where it is right now, or where it was overnight. And then usually, at 50 in the whole numbers, and then, 3,800. So spending some time staying below 3,900, the most next significant level is 3,800. So, be aware of that, set an alert there. And, if things should sell off, and that would be a big day. I mean, this is a wide bar, and also to be able to get from here down to there, the size of the bar. And it's something that, I do look at when considering credit spreads, whereas, okay, these are very large green bars, and here's some big red bar. And okay, over this period of time, over a couple of months, what is the biggest ranges? And you kind of say, okay, getting beyond that range on today would be unusual, but what is that range? Measuring that out. And so over the course in SPX, over the course of the last several days, the last price is about, I've got like an average true range of the last of two, averaging that out over 2 days. Right now, right, but a few days ago, it was below 50. Now it's at about 100. So again, 100 points down from here, would put it around here. And so that would be quite extreme for one day. And when you look at credit spreads and saying what would be a no-brainer, right? You say, okay, I want something below 3,800. And so you can go, right? Just looking, because TC mixes them up with what's expiring already. You can go down. So this is where it's, they get really juicy. What moves like this, you can go down like 37.70, which is more than what we've been seeing. 37 and 37.70 is below the 3,800. You can see my cursor down here into this support. And right now that's $1.20 by $1.30. And you can go down to 37.65, which is still about $1. So looking at average ranges, where could it possibly move? Where's support and so on? That's what would be considered a safe level, coming all the way down here. If it could get all the way down there today, there's going to be buyers on a short-term basis. Right? Reading comments, open shorts yesterday, pre-market hold. The pre-market review is every day awesome. Oh, thank you. Man and I do our best to provide valuable information. So we appreciate the accolades for sure. Thank you. All right, up above. Let me just scroll down here a little bit. The downside is going to be the no-brainer, and the upside, the premium shrink, and, looking at, it takes me a minute to look at this because they mix up the different expirations, the monthly and the daily and all that. So I would just focus on the downside for now. All right. 39.50, if you want to go, I would assume that's doable, but look, coming down here would be extreme and there's significant support. So that's what I would view as being a no-brainer. All right, NQs. What a rejection, moving up there. I mean, I was thinking that's got to tag the 200 MA. And, back down, you can see the head and shoulders kind of a top there, call it a messy one, breaking down through the neckline down here and scrolling. There's just nothing there. Right? There's nothing. And so that was that big up day there, a crazy day. And for those that have been here all the time, we're repeating, power moves are the weakest link. And we've had discussions in the last couple of weeks in MT Lives. What's a void? This is a void. And it's a void where you get this power move. There's nothing to the left because it just went up like a rocket. And then this movement through time, moving away from here, creates a large supply area. So all of this whipping up and down, right? Buyers down here, sellers up there. If it could have hung up here, and broke higher, but it couldn't. So now all the indecision here has evolved into, this is broken down. Where do I want to buy? Anybody that says, where do I want to buy now? Well, it's down here, right? Look to the left. You don't need any fib lines, VWAPs, trend lines. Where are the trend line people doing now? Oh, it's broken. Right? It's got to go lower. So anyway, that's how the air saying. Good morning. Just reading other comments. Okay. All right. YM down almost 400. Maybe these moving averages, you've got these two lows here. That's a stopping point for that. I mean, that's what I would look at, those two moving averages being there. And there's a little, those two bars, which is a turn, it's transition from red to green, as we call it. And then ultimately, down there, that pivot is the most significant level, which lines up with everything else. So, down there around 3,200 and, just going through the 50 and, as I'm looking at this, I'm just waiting for they're not going to say it, right? But the media, if the market was holding up here, you'd have somebody on there saying, look at the golden cross, the 50 moving up through the 200. That's a buy signal. I would be astonished if one of them came and said that as the market slices down into that area. And that's why this is so subjective and can be so misleading as to, moving average crossovers, regardless of what they are. All right, Russell, breaking down, same story. And here's the transports. There's your topping pattern, more of what we'd see as a textbook head and shoulders in the neckline. And when we don't get the intraday data, I'd say this has to be breaking down and we'll be heading lower also. Right? This is my stop. Do I use a stop market or do I use a stop limit? For stop losses, Chase, use a market order. You'll probably, if it's going through a level like this, there might be some slippage, but it's better to experience a little slippage than not to get filled at all. Because when you say limit, that means if you can't give me this price, don't do anything. And you're saying, based on your criteria, I want out of this position. And so if you want to be penny wise and dollar foolish, you might experience a horrific loss. So there are other concepts greater than 100% retracements. Maybe you should pull your stop, but seeing you're in the room, we can discuss that at lunchtime if you want. All right. Moving on. Bitcoin. What's happening in the market here? Come up to resistance. It's the weekly chart forming a sell setup. I mean, if these markets go down and Bitcoin just lets loose, meaning what we've been talking about for a month now on this monthly chart, breaking down here, I think Bitcoin going down to 10,000 or so, maybe below, a little below, could be a buying opportunity. But I think it has some very negative implications. You get so many investors, hedge funds, into this, and maybe it's it's going to be coming down here, and there'll be an opportunity this year. All right. Things that we typically cover, the dollar is down here into this support level where we were looking for it to make a turn. That turn is beginning to happen. It looks like a little breakdown failure below the 200 MA. Interest rates, same story, into the support area. They were jiggling around. You can see that they're moving back up. And this is flattening out. So I think as we go into the new year, there's going to be more and more about the Fed slowing down. Inflation is still high. They're going to be dealing with that, of course, for a long time. You're definitely going to have a recession if it's not there already. And earnings are going to, come in lower. And the markets should go down. And at some point, there's going to be an amazing buying opportunity. So that's what we're looking forward to. All yours, Dan.
Good morning. Yeah, so yesterday we had power down. So for day trading, we were short. For swing trades, it was not so easy putting on new shorts being down so much. So we have very, very light inventory. And we did only one earnings trade, WGO gapping up. So I said we sold the 50s, over 11% lower. So that's going to be, I said, just bid a penny. This whole Madogle we've been playing around with, we sold $30 puts. At least it's not gapping down. So we should have huge evaporation at the open, unless the market knows that there's pending news throughout the day. But I'm bidding a dime on mine, trying to get the heck out of Dodge. I feel like, you remember that game when we were little, the hot potato? That's what I feel like selling options on this thing. It's a hot potato. Get some money and get rid of it. Adobe, is an earnings gap up. We actually had I think we shorted puts on this the other day, but we took our money on the gap up on Tuesday. Now it's gapping up 344, bullish gap, trading range, gap over a red bar, bullish weekly. But you got a sell setup on the monthly. So again, remember Wednesday's MT live of multiple time frames, but all I'm looking at a 30-minute high or some type of other control pullback. I'm looking at this for a put spread for next week. Lima India, little EV stock. Let me set an alarm at 2140 so I don't miss it. But this is a sloppy buy setup. I mean, it broke out, slopping around. I got 3 red bars. So the entry would be over yesterday's high. And then it would be over 3 red bars, buy setup, stop under yesterday's low. And if you take a little peek at the weekly over there, you can see it's, 50% into this wide range bar, which retracement wise is adequate. Do you remember this EDU, little China stock? But look at this. I added this to my core long watch list. I'm very reluctant saying core on a Chinese stock because I just don't trust them. But daily, weekly, monthly are bullish here, so I gotta trade the charts. LANV. I just saw an article in the journal today that this was an IPO yesterday. It's a Chinese luxury goods company. So gapped up, slopped around, but I like watching IPOs. So it's actually a bullish pre-market here, gapping up, void, maybe 30-minute high, day trade. Meta got an upgrade, but still in a trading range, nothing to do. Could be a 0 DTE, but Meta doesn't have typically much juice. Tesla, I mentioned yesterday, is an hourly inverse head and shoulder breakout for 0 DTE, so I posted that. Look at and so yesterday it was relative strength to the market, closed strong, and now it's relative strength again. The market's gapping down ugly, and look at this pre-market. It's consolidating at resistance. So this is a fantastic 0 DTE candidate. Let's see how it sets up. Check the juice, and there you have it. That's what we do. PD Ducks asking me, are we swinging spider puts? The answer is no, because there was no good entry, but somebody in the green room asked us on Thursday. I remember he asked Greg, hey, Greg, what do you think of buying puts here for the next week or two? And he said, yeah, good idea. So the problem is yesterday I said, it's a powerful, steady institutional dumping. Just get on board a moving train on the 15-minute chart. So that would have been the time to do it. The problem is you're just, it's a horrible, horrible entry to be swinging long spider puts. Where are you going to enter? Where are you going to put your stop? I'm looking to sell 0 DTE puts today if it sets up. I mean, it's still bearish as can be, pre-market 15 here. So ideally, we'll sell off for an hour and then 10:30 reversal. So right now it's 383 and change, right? I would love to go through the 380 strike because I'm sure there's a lot of option position there. And maybe that be the final little acceleration down for some hedging stuff. Then I'll look for a 15-minute reversal bar. Steel stock, affirmed guidance. I mean, look look how this was such a beautiful 1, 2, 3. And then under this bar, it turned into a short breakout failure. So nothing to do with that. Javier, same problem. Same problem. Where are you going to enter? Where's your stop? And what's your days to expiration? So if you want to give me a suggestion, we'll look at it. But that's identical problem with long puts. I mean, that's just a bearish short option strategy. All right, so this COSM, I saw gapping down. This is a failed bottoming pattern. This would have been a very adequate long over these 2 bars highs. And now look, it's getting its head chopped off. So daily, weekly, and monthly, we're in alignment for a bottoming pattern. And so that is gone. Maxer here, this looks like a buyout. And that's gapping over 50% and going sideways. There's our Winnebago up $2. All right, so now the official trades, Greg, that I've given our subscribers, we're now 63 for 66. And Machine Gun Sam is, probably 175 out of 180 by now. So we've been doing really well on these. Stavros is asking, is that a 3-bar low buy setup, or do you buy over the high of the last or other high you're chosen? I'm assuming you're asking about spiders on 3-bar. I mean, there's no setup. It's in a downtrend. So, again, I don't know what time frame you're trading. I'm talking about selling 0 DTE puts when I get a setup, which I don't have yet. But swinging it, this is not, unless we get cooked internals with a beautiful reversal, I'm not even thinking long spider swing. I mean, I have many better patterns that if I say, hey, the spiders look like they're, ready to stabilize or bounce, I have a couple go-tos that are substantially more bullish. Lennar yesterday had a nice gap reversal, and then I don't know, I saw Pulte's name on CNBC after the market. Look at this beautiful bottoming pattern. It's a closing weekly breakout. This ideally, if we get an inside bar today that stays in the upper third, this will be a beautiful trade. Beautiful trade to put in the weekly letters 1, 2, 3.
Market's little pop up here.
Golf Hotel. What the heck's happening with you? All right, so I'm watching. Hey, Tesla hit already. Tesla put spread. I don't know what the juice is, but I gave this over this red bar, so I gave an aggressive entry. So that's good to go. That's a beautiful 0 DTE setup. I have no idea what the premium is. And it's pulling in right now. AMD, I don't like that at all, Stephen. It's still in a downtrend. It gaps down, and there's no price void. That's a nasty breakdown on the weekly too. No, Tesla is superior setup. Meta's in a trading range, but put spread candidate. Hey, my Lima India. Let's buy yesterday's high, stop the week's low. And I'll check puts too, because that's what I do. Any put spread, any directional is a credit spread candidate. But this looks fantastic. I hate chasing. I wish it would wait 30 minutes, but the setup's there. Where are we on Winnebago? Yeah, see, the Winnebago is it's not displaying my 1 cent bid, but so I'm just gonna leave it. Excuse me. Hey, Madogal. Madogal is the 10 cent bid is me. So that's good. Now we can move stop here because we have no disaster gap to deal with right now. So 57.21. Can't wait to see the day the news comes out on Madogal. I mean, the premiums are jacked up and down, so it's I didn't figure out the skew per se, but so Adobe was a put spread, but well, I said 30-minute high. Let's see what I can